Gold is down $100. Panic in the precious metal sectors. I say not so fast, my friend. Let's look at the charts. Let's look at the really important level that we need to pay attention to. And I want to show you a really important graphic so that we can keep our eyes on the price, which is long term. Gold is going to go up, and we're going to make a lot of money with the gold producers and the gold junior producers, developers, even some explorers. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Helmy, and I'm here at the German Gold Convention. You can see it in the background, maybe a little bit somewhere. They're just about to serve lunch. I just stepped out of my meetings. I'm more here for the one-on-one meetings than for the presentations. Got some really interesting meetings with some silver companies that we'll talk about in the next coming weeks. But today we got to talk about gold. What's going on with gold? Look at the chart. We're down almost $100, which, by the way, is exactly what I told you in yesterday's video. And if you missed yesterday's video, hit the subscribe button so that doesn't happen. In that video, I told you if we break below this upper zone of the support zone, we're going to go down $100 down to the lower end. Well, we did that. That exactly happened. We actually overshot it. But again, not that big of a problem, because we do know that the real line in the sand that's really important for us is 4,500. What happens around $4,500, that will decide if gold is going to retest the 200-day moving average, and we're going to get that sell-off, maybe even go down to the long-term uptrend, the green line you see here, or undercut it, which will probably happen in that case, and get a liquidity grab from the institutional monies with all the stops of retail and the panic selling by retail sitting there. So now we got to watch 4,500 like a hawk and what happens today in US trading. But I want to show you a graphic to illustrate. Right now there's going to be a lot of panic, a lot of insecurity, uncertainty in the gold market, in the silver market, among the precious metals. What's going on? Is this the end? Are we going to get the monster sell-off? Is gold going back down to 3,500? That is what we're going to talk about and what we're going to hear. I say, don't get fooled by the fear. Okay? Yes, I get it. Today, none of us are a balloon of happiness, right? That is just sitting around and enjoying life. That's not what this is. Fair enough. But this does not change the fundamentals. Again, I just came out of meetings. Almost all the gold companies that I'm talking to, the silver companies that produce silver equivalents, or gold and silver in this case, they're all calculating with gold 3,200, 3,400, maybe 3,600, but that's it. So their calculations for profitability are not affected at all by this $100 move. That is just short-term trading in the market that freaks out the markets. And it does not change the story at all. And this is where I want to show you this graphic. And this is a really important graphic. This is an excellent graphic by Azuria Capital, and it shows you the median profit margins of the gold and silver producers over the past 40 years, almost. And the interesting part is obviously the green part that you see to the left side. That's the last super cycle that we saw. And then if you look at the far right, where we are right now, and you can see that the profit margins are eclipsing the absolute tippy-top peak highs of 2010, 2011 of the last super cycle by the gold miners. Now, you will say, well, that makes sense. Oil price was way higher then, electricity was way higher then, costs were higher, and the gold price was much lower than it is today. But what is the real important point of this graphic is, do you believe that gold is going to go higher, that silver is going to go higher? I believe that. If that is the case, then the margins will reach new highs and will actually improve, right? The way to read this graphic is not 2025 to 2010, 2011, but 2025 to 2005, 2006. And if you do that and look at the graphic, then you see, yes, we had a collapse. That's a financial crisis. Everybody got hit. But we got a uphill to go, right? A big way up to go on the margins with rising gold prices. The gold and silver miners are only going to become more and more profitable. So try to find me a sector outside uranium maybe, where you can be sure, pretty sure, if your thesis that gold and silver are going to go up, long term, mid to long term, where you can be sure whatever scenario we have with inflation, with stagflation, with consumer behavior, recession possibilities, that the margin's going to be high or actually going to improve. So the company's actually going to make more money in the coming years. The gold and silver miners are on the tippy top of that list. You can't take big tech. Nobody knows if the AI, all the AI investments actually going to pay off in the end. I sure as hell hate Microsoft Copilot. But keep this in mind. We are having volatile times, but if you were like me, and for a month you have said, man, if there's a weakness in the market, I'm gonna buy me some gold mining stocks, or physical gold, or silver, however you want to play it, then this $100 drop, not great, no doubt, but you know what? That is the present. That is the Easter bunny coming out and be like, ooh, sorry, I was drunk at Easter, slept through it, forgot about it. Here's your present, Daniel. This is our chance. Now, let's see what happens at 4,500. We'll talk tomorrow. Goodbye from Frankfurt, from the Deutsche Goldmesse.